Why am I so
Hey, good morning. Good morning. Happy Friday. We are here, Financially Fluent Friday. Zach here with Miss Sarah Haliburton. How you doing, Sarah?
good? How are you?
I'm doing well. We had got woken up to a sick tummy for our 4-year-old this morning. So beyond that, we're doing great. So the joys of parenthood, right?
Absolutely, absolutely.
Yeah.
It
So
happens.
yeah, she's doing good now though. So kind of got through the worst of it early. So hoping
Good.
it, hoping that stays that way. So
So we
um, go ahead.
so we have a lot to cover today.
Yes.
So Zach, I don't know about you, but I cannot stress enough in this market how important it is for buyers to be fully prepared when they're going into a deal. And what I mean by that is even if you're just getting the idea that you're going to start looking, be prepared. And what does that mean? What are you seeing?
Well, first things first, obviously, and not to be biased by any measure, but it's getting that pre-approval done and making sure that you have everything in and ready to go. Because when you have such a competitive market, you have to be able to pull the trigger quickly. I think it's kind of a standard these days that you're going to close a loan in 21 days, and if you're not able to close in 21, most realtors are walking away. And so, make sure that you have the file ready to submit upon accepted application, fully pre-approved, meaning we've gone and looked at the assets, we've gone and looked at the income, done the underwriting process and gotten it all set up. Because I know that when I hand off to my partners, I need to make sure that that offer is going to stick and I can pull the trigger immediately and submit the file right away. That I think is probably the most important thing from my side of the coin as far as being ready is that they need to know payment range. They need to know exactly what to expect as far as the process, and that we can submit the file immediately upon getting an accepted offer. What about you?
So what I've seen, I actually met with someone and they said, yeah, I'm going through this big bank. We're not going to name names here. And they said, they told me to get the purchase agreement back and then they finished my pre-approval. And I'm like, wait a minute. So they want you to go into the battlefield and fight tooth and nail to get your offer accepted, only to come back and then maybe find out that you're not pre-approved for that amount. It just doesn't seem fair to the buyer or to the company or to the agents involved or the seller. And so I told him, I said, you know what, I feel like the best thing to do is to know exactly where you stand. I want to know exactly how much my monthly payment is before I offer to pay any price for a home. I want to make sure I'm comfortable. I'm not house rich, cash poor. I want to still be able to live my life. And so and then, there's things like these homes are sitting for 4 days, 5 days on the market. And so if I don't have my pre-approval in place, and if I don't have those items that I need to make a smart financial decision, I'm not going to pull the trigger and I'm going to miss out.
That's so true. And you also need to know things like cash to close, right? I mean, even in like a VA loan, which I kind of have a feeling that maybe that big bank you were talking about, I think we talked about this before, was a VA buyer. And even if they're not bringing a down payment, they need to know that there are closing costs and they need to know what that cash to close is going to look like. Even so much as talking about things like the deposit, right? I think that we need to discuss where the EMD is going to be, what they can expect, earnest money deposit, and how they want to get it there, just so that they're ready on that side too.
Well, and how much is it? So the standard is 1% to 3%. In this market, we're seeing more and more people put more and more down. Now, your earnest money deposit, Zach, you and I know, is just like if I were to get married and I want to reserve the venue on my wedding day and we're a year out, they're going to ask me for a deposit to hold that space. The earnest money deposit is essentially the same thing, right? They want to know that you're committed to going through the process of escrow and that you're going to put your best foot forward to withhold the items in the contract that you agree to with the seller. And so escrow just holds that money. They just sit there and they hold it until you decide to either back out of the deal or until you move on to closing. And then those funds are distributed to either your down payment or your closing costs. So typically it's 1% to 3% of the purchase price. Well, for VA, sometimes you can go lower, but in this market, we're seeing more and more sellers want more stake in the game. They're wanting a bigger earnest money.
No, that's absolutely the case. And having that cash, knowing what, like you said, expecting to have it ready, being prepared. And then also knowing, that money is not just lost money, that it's going to come back to you. It's going to cover the costs. It's going to get applied back towards, the overall closing and everything there. So it's definitely something there. So I don't know, there was a little bit of feedback on the mic. I'm not sure if it was just for me, but just, I don't know, maybe mute and unmute and see if it changes. But I don't want to have it be all, No, you're 100% correct. It's knowing, okay, do I need to put more money down? Do I need to have a higher amount of, for the deposit? In the cases where there is a, for example, a down payment that's not a VA buyer, how can we be aggressive that way? And I think that's an interesting point too, because you have a lot of people that are putting more than just a 3 or 5% down in this kind of market, and with that. What's your strategy on that approach as far as down payments, and what do you kind of advise when it comes to clients on that end, when it comes to, approaching down payments and trying to be competitive against some of those cash buyers or people that are putting down the, pretty massive amounts of money?
I mean, I always default to do what you can. Like, I never want to see a client put in a position where they can't afford it and it's uncomfortable and it doesn't feel good, because at the end of the day, I don't want you to regret it. I want you to have a good feeling going into your home purchase, right? And if you're stretching your budget and you're trying to put every last cent in, it just sometimes doesn't make sense. I've realized over the last 7 years, buyers get the homes that they're meant to have, and if you don't get it, there's probably a reason, and maybe you don't know it. But Zach, I think that also kind of leads us into, what about appraisals? Like, what are you seeing on the appraisal side? Because I know what I'm seeing, and I think that we need to talk about it.
That's so true. I think about clients that are, especially in the VA buyer situation, but I'm seeing some people waive appraisals. I'm seeing people that are, there's giving language in the contract about appraisal gaps. And, it's difficult for certain types of buyers that, for example, like a VA loan, you have to have an appraisal, just bottom line. But there are some strategies you can employ to try to compensate for that. So, for example, you can offer to put in the contract language that you'll pay the appraisal gap. So if in the off chance the appraisal comes in low, you have 20 or 30 or 40,000 in the bank, you're able to pay that gap. And that's something you do have to kind of strategize for, because in a market like this where things are going top dollar, there are chances of that happening. But I think you and I both know right now the market's dictating. And, even if it does come in low, we're not seeing it that low. But yeah, that's a major concern, because what does happen, and from your perspective, what happens if that appraisal doesn't come in on value, and how do you advise your clients there?
Well, I think that there's two things to consider, right? I think that there's the thought process of the appraisal didn't come in, so I'm overpaying for the house, right? Now, what we have to remember is that the appraisal is one person's opinion. I could sell the same house 10 times, 10 different prices, and get 10 different appraisals, and it's the exact same house at the same time. So it's one person's opinion. And at the end of the day, you have to look at why you're buying and what you're buying. Are you buying for short term? Because then, yeah, maybe you are overpaying if you're only going to be there 2 years and, the rent's not covering the mortgage and that kind of thing. But if you're buying something that you're going to live in for a while and it's a long-term plan, then what's the $10,000 over the next 10 years? And so I think that the mindset of that is something that we have to address first. And then the second thing is, when we have an appraisal that comes in low, there's a couple different options that we can do. We can actually go back and try and argue our value to the appraiser. And what that means is like putting together other comps in the area. Maybe this house has special views, special features. Maybe it's on a cul-de-sac, things that they didn't take into consideration. And remember, appraisers are humans. They make mistakes. I had one that came in like $40,000 below, and he was pulling comps from an entirely different neighborhood, which if you live in San Diego, Golden Hill is very different than Logan Heights. Very, very different. And so one neighborhood's going to pull lower and one's going to pull higher. So we do have the opportunity to work with the appraiser and say, hey, you might have missed these items. This is why we feel the value's here. So that's part one. Part two is we can always go back to the seller and say, look, it came in 40K below. This is what we're willing to do. And we can put our best foot forward. Maybe it's we can only do the appraised value. Maybe it's we can put in 10,000 more. Maybe it's we can put in 40,000 more. But it's up to that buyer and what they're comfortable with.
Yeah. Yeah. And, so you talk about the appraisal rebuttal or trying to get the appraisal revisions. That's actually, if you have the comps, that's the biggest piece of the puzzle. And I always have to kind of lean on my partners with that, is because I'm not the realtor. I don't know that, I don't spend the time studying the market, but obviously you've done the footwork when you put the offer in on the house as well. So what the competition or the competitive, properties look like, the comps. And so to that end, as long as you have them in the arsenal, a lot of times you'll find I've gotten 30 and 40,000 extra, back if we had the right comps put together, and that's massive. And being able to speak to that, it's usually pretty quick and efficient. And then the other side of the coin is that there's that negotiation piece. And if you have an appraisal done, it does give you some strength because you can go at them and say, hey, listen, this is where the property's at. This is where it's valued. Bottom line, you could try to do it again. We could try to do another appraisal, but then you're rolling the dice and taking chances versus we can get this thing closed and then potentially pay any, gap. I think it comes down to the communication on the realtor side from my end, from my perspective on how you communicate, how you negotiate with them. We'll do our footwork for the appraisal rebuttal, and we're kind of limited, but we could definitely, provide the comps. But what really is going to matter is, how well you negotiate on your side. From my experience, and it's usually though a strong agent can usually work some things out, and also how motivated are the sellers.
Not only that, Zach, but it's like the mindset in some agents that I've seen over my career where they almost had this like adversary mindset of like, it's you versus me, the seller versus the buyer. The more you have an agent that's a collaborative agent that works towards the goal with the listing agent, then the better it is. Because think about it, if we have a rebuttal come in, there might not be a comp that has our price, but the listing agent has 17 offers, 10 of which are willing to pay the same price. That's the market value. And so working together with the listing agent and the buyer's agent in a collaborative effort is really important to get you what you need.
No, 100%. Kind of on a related note, I wanted to talk a little bit. This is something I know we discussed a while back in inspections, because people are also waiving inspections and doing no inspection contingency. What's your perspective on that?
I will never recommend not to do a home inspection ever. I just had one that's brand new construction, and people think, oh, it's new construction, I don't need a home inspection. We've had home inspections on new construction where drain lines weren't connected. So all of a sudden they move in and the upstairs shower is pouring into their downstairs living room, and that's going to create an inconvenience and a hassle for the borrower. And so we always recommend a home inspection. Now, I will do a shortened contingency period on that. The standard's now 10 days. I might do 5. It's short enough to where the seller isn't really giving up a whole lot of time in case we do bail out, but it gives the buyer the opportunity. And I've got 2 or 3 home inspectors that I have on speed dial, and I'm like, hey, I need you on this date. So I will always recommend a home inspection because you need to know what you're getting yourself into. You need to be prepared, and you need to know up front if there's issues in the house or not. So like I said, I'll never suggest waiving it. I have had buyers that will do a home inspection almost during the tour day and see. But ultimately, I'll just do a really, really short inspection period.
It's so important. I can think of one client recently that they were in contract a long time, and I could go on and on about that. There was some fun with that, finding their own properties, and they had some issues as far as what they were looking for. But they literally walked away from 2 properties because of the home inspection. And had they not had those home inspections, they wouldn't have known. And one was a foundation issue, and then one was a flip where the agent had paid really shoddy work, but they did a facelift. So if you're not digging in and you're not looking the way an inspector does, they would have never known, and they would have gotten into this nightmare money trap. And it could have been dangerous because some of the stuff, some of the electrical work this guy did on this property was scary. And so, it's like you said, I think one thing you said that I think is really important, having a couple great inspectors on speed dial ready to go, because that is massive, having those connections that can move for you quickly, because that's, like you said, everything's expedited these days. And if you could cut the timeline down, it makes it a little more palatable.
The other thing, Zach, too, is knowing what exactly is on the home inspection, right? Because some things sound very scary and they're not. I would say almost every single house that was done or built, before 1960 and maybe hasn't been remodeled, that most likely the house isn't grounded, which means that your outlets only have 2 prongs instead of 3, which means like back when we were kids, we could stick 2 paper clips in and get electrocuted. Now they don't want you to do that. But when you're looking at it from a home buyer perspective and you're like, oh my gosh, the house isn't grounded, this is super unsafe, knowing and having someone that can advise you on how much that cost actually is, like, okay, well, that's going to be a $1,500 cost. Is that a make it or break it on this house? Most people, if they love the house, would say, no, it's not. But if you just read the inspection report and you have no context as to what that means, it can be very scary. So having someone that can actually guide you through that process is important as well.
100%. I think of another recent closing that we had, and the inspection came back kind of, there was a lot to be done. It was a fixer. They actually got in at they were top value. They went highest best, and they ended up winning the offer because they came in, at really on point. The value came in dead on, so that was great. But when they started doing the inspection, there was a lot of issues. And initially they called me freaked out and said, "Oh gosh." I said, "Well, calm down. Like, just like you said, you're gonna have to talk with your agent and see, what is the must fixes and what are the things that are kind of, we don't need, you can work with them." And they ended up actually getting, the agent was able to contact the selling agent and the listing agent and got a lot of the work done. So that was another thing, is you can use that as a tool that, as long as you have a really competitive offer and you're coming in strong, that most of the time in this market, a lot of these buyers or these sellers are going to be equity positive. So they're going to be a little more prone, if you're coming in with that really higher offer, that stronger offer, to work with you on the repairs. Because repairs, honestly, they're just like on the your side with the inspector. Most listing agents are going to have contractors on speed dial. They're going to have people that can come in and do the work. So as long as your offer is strong, I think that also puts you in a position to negotiate a little bit. What do you think on that?
I absolutely agree. And you do have that renegotiation period after the home inspection. And I mean, in California, the bottom line is the contract says that every property is sold as is. But at the end of the day, the buyer and the seller both want to do a deal together. They want something collaborative. And so most sellers, like you said, are equity positive and are willing to work with you.
Yeah, they don't want to go through the process again. They've gotten, it's a one thing I've always said is that beyond having kids, the home selling and buying process is one of the most stressful things you go through, just period. And even if it goes perfectly, it's stressful because there's so much invested. It's such a large investment. And people don't want on either side to have to drag that out. So if you can find a way to just kind of work your way through it quickly, it tends to be, I think it's effective and people want to work together, like you said. So I 100% agree with you there.
Absolutely. Well, Zach, I think that that's pretty much everything that we wanted to touch on today, right? We're right about that 15-minute mark. So we'll keep it short, we'll keep it sweet, and we will see you next week.
Next week, Financially Fluent Fridays, we'll be alive again. I like this. I like this a little better than the pre-recorded version. Although, unless you got Sarah's a busy lady there. So if you never know, she may have called off to work and provide her skills. But yeah, guys, we'll be here live next Friday. And if you have any questions, if there's anything you want us to discuss or anything you need some tips on, drop them in the comments, shoot us a message, let us know, and we'll make sure we address them for you.
Thanks, Zach. Bye, guys.
Have a great day, Sarah.
You too.